Good morning, students. Today I want to work a problem on putting a value on inventory. We want to look at FIFO, LIFO, average, and specific identification. These are my Lander students. What we need to do now is to find your handouts on Blackboard. Okay, we already put PowerPoints up that had the Ramona Rice problem in it, and it also has a link down here where you need to pull up the in-class problem and the homework problem. So let's click that on. Inventory problems, here we go. Okay. Now we want to look at the Kodak problem, and then your homework problem will be the computer problem that follows. You can either do this manually, or you can go to the assignment tab and type in your answers. But if you do it manually by printing this out, you need to upload it under assignments. Okay, so let's move forward, and we want to move over here, and let me pull up the handout and secure my phone so that I can record this for you. Okay, all right. Now, in this problem, the first thing you need to do when you work any of these problems, you need to find goods available for sale. So what I'm talking about is you need to find your beginning inventory. Okay, that's this number. Beginning inventory plus purchases. Notice all of these that have purchases equals goods available for sale. Okay, so beginning inventory plus purchases equal your goods available for sale. Now your sold items, we want to put a block around that, and we'll come back to that in a few minutes, but it's not going to be included in goods available for sale. So let's start out by finding what your beginning inventory amount is. And if you notice, you have 8 cameras in beginning inventory, and they cost us $100 each. Now, Kodak is a manufacturer, so most likely they made these. Sounds like these are real expensive type cameras. So 8 times 100 means that the dollar amount in their inventory for beginning inventory is $800. Then they started purchasing. Now, perhaps they were purchasing parts or what have you, but at any rate, their purchases, they had 3. One was on October the 3rd, 12 cameras that cost them $110 each. So do your multiplication on that. That's going to equal $1,320. Then on the 14th of October, they purchased 7 more cameras at $115 each. Do that multiplication. So all of these are multiplication problems. It's going to give you $805. Remember, they are buying these to resell, so this is their cost. Okay, 15 cameras at $125. And multiplying that, that's going to give you $1,875. Now, if you add those numbers, what you have is $4,800 in goods available for sale. So that's all the cameras they had available. So let's count up how many cameras we had. 8, 12, that's going to be 20, 7, and 15. So the total number of cameras would be 42 cameras. And the cost of those cameras would be $4,800. So they have 42 cameras to sell. Notice that they sold 26 here. So that number's important. All of these problems will have to do with selling $26 and 26 cameras, I'm sorry. What we're trying to find out here is what was the total cost of goods sold, and we also want to find out what was the ending inventory dollar amount of the cameras. So we want to know 2 things, cost of goods sold and ending inventory. So do your homework that way also. Now, the first problem is actually specific identification. Specific identification. Okay, and I've written it over here. That means that we can go in the warehouse and we can specifically tell which cameras were sold and how much it cost us. Okay, and this should be a fairly easy one because what you have here is we go in the warehouse, we pulled out 10 cameras, the cost on those were $125, so we know that that cost was $1,250. And then we go back in the warehouse and we can tell that we pulled out 5 cameras that cost us $115. So that's $575. We go back into the warehouse and we have 11 cameras that cost us $110. So $1,210 is what that cost. And those are all the cameras that we sold. Now notice if you add through here, you need to make sure it's no more than 26. 10, 5, 11 means 26 cameras were sold. And if we add up the dollar amounts, we come up with $3,035. That's the cost of goods sold. And I'll abbreviate that as COGS from now on. Okay. So we know that that's how much the cameras cost us, whether we bought them or manufactured them. Now, if we want to find ending inventory, what we do is we take that cost and we subtract that cost from our goods available for sale. Okay, so goods available for sale was $4,800 minus cost of goods sold, $3,035, gives us an ending inventory amount of $1,765. Okay, so those are your two answers for specific identification: cost of goods sold and ending inventory. All right, let's move on to first in, first out. Now, with first in, first out, what you want to do is you want to go to the oldest first. So whatever you bought or had to begin with. So that means you want to start with beginning inventory. Okay, that's the oldest. If you look at the dates, we had that from October the 1st. Now remember, we have to limit it to 26. That's how many we sold. So in our beginning inventory, we had 8 cameras that cost us $100 each. Okay. Now if you remember the milk example, I told you that when you're doing first in, first out, what you're going to do is generally the store is trying to get the older milk out of there. It's used with produce, so they put it on the front for you to buy the oldest dated milk. Okay, and same thing with apples or bananas. They're going to try to convince you to buy the older produce so that it won't spoil. Now with cameras, they could become obsolete, so it is good to get the early inventory out with first in, first out. So let's do that. We have 8 at 100, and that's going to be $800. Now remember, we're getting cost, so we go to October the 1st to begin with. Okay. And then we need some more cameras. So we go here to October the 3rd. We want to take all of those cameras that cost us $110. That's going to be $1,320. Now keep track of how many cameras you have. 12 plus 8 is 20. We need to sell 26 cameras. So let's go to October 14th, we have 7 sitting there labeled October 14th. We want 6 of those. So take those 6 cameras from October 14th. And that is going to be $690. Okay. Add your numbers up. You come out with $2,810. Make sure it's 26 cameras. So 8 plus 12 is 20 plus 26. And this is going to be your cost of goods sold. Okay. Now to get ending inventory, you go get your goods available for sale, which was up here, okay, 4,800 minus cost of goods sold, and that will give you your ending inventory, or what you have left there, and that's going to be $1,990. Okay. Now, remember what we're doing here is companies have an option, okay? There are advantages to all of these, and I may come back if I have time and show you those, but one advantage is particularly for LIFO, and we'll take a look at that in just a minute, and I'll mention that. But FIFO is going to get your older inventory out of there first, which is good for produce, and it's good for items that would become obsolete. So then your inventory is valued at the most recent prices, okay? Now, let's go on to LIFO. LIFO means last in, first out. So in the milk example, I was telling you that you normally think in a LIFO fashion because you want the freshest milk, so you go to the milk that has the most recent date. Okay, so if that's the case, then what we want to do with LIFO is we sell the most recent. So that means we're going to start with the newer purchase. Okay. So if that's the case here, notice the most recent. Now don't do October 29th because that just tells you how many you sold. That's the only reason for that. Okay. You want to go to October the 20th here. We purchased 15 at 125. So let's take those first. October the 20th. 15 at 125. It's going to give us $1,875. That's dollars. Okay. Then we go to the next most recent if we haven't used up everything. Now notice on your homework though, you may stop there, but or notice that on one of these you stop with either the beginning inventory or the ending. But now we want to go to the 14th, so we purchased 7. 7 and 15 is only going to be 22, so we can use all of those. 7 at 115. And that's going to be October 14. 7 at 115 is $805. Okay. And then, remember we sold 26. So what we have here is, 22? So we need 4 more. So let's go all the way up. And we want to go to the 3rd. And we want to take 4 of those cameras from the 3rd. At a cost of $110 each. So only 4. There's 12 sitting there. That's going to be $440. Okay. Now let's add up, make sure we've got all of our sales here. 15 and 7 is going to be 22, plus 4 is 26. And that's where we stop. Add your cost up. That's going to be $3,120. And that is cost of goods sold. We now want to get ending inventory. So go get your goods available for sale. Remember, that's all the way up here, 4,800. That's where we calculated it, so bring that down here. Subtract cost of goods sold. That's going to give you ending inventory, and that is 1,680. 1,680. Okay. All right, remember LIFO is the one that sells the most recent purchases, but you end up having old inventory because those cameras in beginning inventory, unless you sell 42 cameras, you'll never get into there. So they become obsolete. That's a problem with it. International accounting standards, they do not like this method for that reason, because that's a problem. Plus, this method was devised in the 30s to help businesses lower taxes. And if I did it out for you, you would see that net income would be lower here because cost of goods sold is higher. In fact, look, cost of goods sold is $3,120 compared to $2,810. So international standards did away with that. They don't use LIFO. We were trying to switch to it. Some companies have, but there's still a few that do use it for tax reasons. Now let's do average. Average is the one that's kind of middle of the road. It's going to even everything out. Like I gave you the example, you just mix all the milk together and it's the same. Even you're mixing older and newer milk. There's a little formula, though, for average. What you want is the dollar amount of goods available for sale, and you want to divide that by the number of units available. Okay, goods available for sale, dollar amount, goes all the way up again to where we calculated it at the very beginning, 4,800. Number of cameras is 42. So we're going to divide 42 into 4,800. And what we do is get a cost for one camera. So we're averaging it out, whereas we had all those different costs. If you do the division and round it up, it comes out to be about $114.29. Okay. Now you want to multiply that times the number sold. And in this case, that number sold was 26. So if you do that multiplication, you end up with 2,971.54. And I'm going to, you could round it up. I think probably the best thing is just to round it up to 2,972 to make it easier. That's going to be your cost of goods sold under average. To get your ending inventory, again, you want to take goods available for sale, which has been 4,800 the entire time, and you subtract cost of goods sold. And you end up with an ending inventory, in this case, of about 1,828. Okay. Now, it averages it out. Okay, it kind of falls in between the two. If you look at cost of goods sold, it's kind of between the LIFO and the FIFO. Specific identification has no pattern to it. It just depends on what the person says that we're going to sell, which ones we're going to sell. And I always give you that number. So do the best you can working through that computer problem. Okay, either download it, work it out, upload it under assignments, or go through and type in the answers. I do want both cost of goods sold and ending inventory. Okay. If you have any questions, send me an email, text, call. I will be out of pocket for a little while on Friday, so don't get impatient if I don't get back to you right away. Okay. Good luck. Take care. See you next time.